Hello, traders, and welcome back to your one stop shop for learning about Forex trading. Today, we are diving deep into the world of currencies and exploring how you can potentially make profits by buying and selling them. So, let's remind ourselves what a Forex market is. It is a global marketplace where banks, institutions, and individuals speculate on the exchange rate between fiat currencies. So, how does forex trading work? So, you as a forex trader, you speculate on whether one currency will rise or fall in price against another currency. So, forex trading can be defined as a process of speculating on currency prices to try and make profits. The value of a currency is influenced by economic, political, geopolitical or events and trade and financial flows. Predicting a trend in the foreign exchange market is simple. The mechanics of a trend are very similar to those found in other financial markets, say like the stock market. So if you have any experience in trading, you should be able to pick up pretty quickly. And if you don't, you'll still be able to pick it up as long as you keep researching for materials that guide on the same. So the objective of forex trading is to exchange one currency for another in expectation that the price will change. More specifically, the currency you bought will increase in value compared to the one you sold. Remember what we said exchange rate is? It is simply the ratio of one currency valued against another currency. For example, uh, US dollar for a Swiss franc. The exchange rate of these two indicates how many US dollars can purchase one Swiss franc, or how many Swiss francs you need to buy one US dollar. So, how do you lead a forex quote? Currencies are always quoted in pairs, such as uh, British pound slash US dollar or USD slash Japanese yen. The reason they are quoted in pairs is that in every foreign exchange transaction, you simultaneously buying one currency and selling another. And you may ask yourself, how do I know which currency I'm buying and which one am I selling? Great question. This is where the concept of base and quote currencies come in. So, whenever you have an open position in forex trading, you're exchanging one currency for another. Currencies are quoted in relation to other currencies. Here is an example of a foreign exchange rate for a British pound versus US dollar. British pound being the base currency and USD being the quote currency. The first listed currency to the left of the slash is known as the base currency. The base currency is the reference element for the exchange rate of the currency pair. It's always a value of 1. The second listed currency in the right is called the counter or quote currency, the US dollar in this case. When buying, the exchange rate tells you how much you have to pay in units of quotes currency to buy 1 unit of the base currency. In the example above, you have to pay 1.21228 US dollars to buy 1 British pound. When selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. In the exchange above example above, you receive 1.21228 US dollars when you sell 1 British pound. If you buy euros as US dollar, simply means that you're buying the base currency and simultaneously selling the quote currency. In other words, you buy the pair if you believe the base currency will appreciate or gain value relative to the quote currency, or you sell the pair if you think the base currency will depreciate, lose value relative to the quote currency. With so many currency pairs to trade, how do forex brokers know which currency to list as the base currency and quote currency? Fortunately, the way that currency pairs are quoted in forex market is standardized. You have noticed that currency quote as a currency pair are usually separated with a slash. Just know that this is a matter of preference and the slash may be omitted or replaced by a period or a dash or nothing at all. Long and short. First, you should determine whether you want to buy or sell. If you want to buy, which actually means buying the base currency and selling the quote currency, you want the base currency to rise in value and you would sell it back at a higher price. In a trader talk, this is called going long or taking a long position. So remember, long equals buying. If you want to sell, which actually means that you sell the base currency and buy the quote currency, you want the base currency to fall in value and you want to buy it back at a lower price. This is called going short or taking a short position. So remember, short equals sell. You may also come across ones like flat or square. So if you have no open position, then you are said to be flat or square. Closing a position is also called squaring up. Also, you'll encounter ones like bid, ask, and spread. So, what are they? All forex quote are quoted with two prices. One is the bid, and the other one is ask. So, in general, the bid is lower than the ask price. So, what is bid? Bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. This means the bid is the best available price at which the trader can sell to the market. If you want to sell something, the broker will buy it from you at the bid price. Alright, okay, let's look at the ask. What is ask? What is the ask price? The ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you can buy from the market. Another one for the ask is the overprice. If you want to buy something, the broker will sell or in quote offer it to you at the ask price. Then finally, what is spread? The spread is the difference between the bid and the ask price. And in conclusion, Forex trading offers opportunities to profit from changes in currency prices. By understanding how Forex trading works, reading Forex quotes, managing your trades effectively, you can increase your chances of success in the Forex market. Thank you for watching. Don't forget to subscribe for more Forex trading tips and tutorials.